Hi everybody, I hope you guys are having a wonderful day. Today I wanted to talk about Doordash because I can't seem to sift through the internet without coming across a bunch of articles on Doordash. Again, the company did IPO today, which was pretty significant. There are a lot of investors who are anticipating it, a lot of people buying. The shares currently are being sold at around $180. Consider that that price is well beyond the estimate that the company was originally meaning to sell its shares for, which was over the weekend at roughly about 90 to 95. And I think that was an increase from the last time that the company was estimating where their shares will be sold. So obviously much anticipation. People are very excited to get on board. So again, that gives the company a valuation of $30 billion. The last private valuation that they had earlier this year was only $16 billion. So that's a crazy increase. Question is why? If you want a deep dive into the company, look at my earlier video that I did last week, whether it's a buy, all the different numbers. The link is in the description below. I'll provide it for you. Please comment, please like. Thank you. Appreciate it. But here's briefly why I personally would not put my money in the company just yet today on IPO day. So first, think about coronavirus. So in 2019, the company had a net loss of $533 million. This year, the company took off because obviously coronavirus, people relied on food delivery while they were at home in quarantine. It's a delivery service. They reported massive revenue growth, obviously, in the first, second, and third quarter of 2020. It's a stay-at-home stock. Company reported a profit of $23 million on $675 million in the second quarter. Now, that was the only time the company reported GAAP profitability, and that only lasted one quarter, and that's during the global pandemic, when people are required to stay at home and food delivery is a necessity. Think about it. The next quarter, the company increased their revenue to $879 million, but lost $43 million, didn't have GAAP profitability. So you wonder why. That's still during the pandemic. We're still in the rage of the pandemic. So we'll see what happens next quarter, but that is at least curious and concerned. So the company itself said in its prospectus, the S1 filing with the SEC, that they expected their costs to increase over time and losses to continue as in their words, we expect the investment to invest significant additional funds towards growing our business and operating a public company. So they're specifically talking about their autonomous vehicles. They're trying to get involved in that. They bought a company. They're also trying to get into a delivery of things other than food and meals. But then they're up against competition like Amazon, and Walmart. I talked about this in the other video. I did a deep dive, so check it out. Second thing I think that is worth mentioning is the fact that the company has major competition looming on the horizon and is already being a threat. So this includes companies like Uber, Grubhub. Now, I do know that at the moment, Doordash is leading its competition in the US. The reality is that the switch cost is almost zero. In other words, if you look at this chart, it shows how customers who use Doordash also switch over or at least use other food delivery systems, apps like Uber and Grubhub. So if you think about it, you're sitting at your house and you're hungry on a Saturday night, you want to binge Netflix. You open up your phone, there's Uber, Grubhub, Doordash. I mean, you're gonna get from either one of those. You're not married to any one of them, and that's a problem for the competition. So that's something they're facing. Another major issue that investors and potential investors must think about, and we spoke about this in part one earlier last week. States like New York and California are looking to impose regulation that would require the company to classify their delivery drivers as employees and not as independent contractors as they are currently referred to. That essentially means that the company is going to need to treat them like employees, which means they're going to need to pay their benefits, they're going to need workers' compensation, they're going to need unemployment insurance. These are all huge additional costs and burdens to the company's bottom line, so that's a problem. So not to mention that the company has been dishing out huge amounts of money to fight off this regulation in the first place. So for example, they spent tens of millions of dollars in California passing Proposition 22, which essentially exempted them from calling their delivery drivers employees. So that was a win for them, but again, tens of millions of dollars. So imagine if other states decide to pass some sort of regulation, they're going to need to fend that off, again, affecting their bottom line. That's a problem. So we'll see what happens with this regulation. Like ultimately, these are things that investors should definitely worry about and not jump on the opportunity just to buy an IPO because these are serious concerns. So I guess in summary, like I discussed in my previous video, in order for the current Doordash valuation to be justified, they would need to make significant headway in global sales, not just US sales, while also lowering their margins significantly to points where most of their competition and most in the industry don't have their margins, the percentage of their margins at. Now, that is also post-pandemic. I don't have to tell you, we have now Pfizer vaccine, we have an AstraZeneca vaccine, we have Moderna vaccine, we have all these vaccines coming out. The UK administered their first dose today, I think, to the first person. His name was William Shakespeare. Interesting fact. I wonder if they did that on purpose. Anyway, the point is that people are going to want to go out. People are not going to want to stay at home. Maybe people will. I don't know. Maybe it'll shock you. But I don't think people are going, in my opinion, I don't think people are going to want to stay at home. I think people are going to want to get out. At least they're not required to stay at home, so that food delivery is not a necessity. And so what is the company going to do after that? The company couldn't keep GAAP profitability for more than one quarter, and that's during a pandemic. And like I said in my first video, think about a wet dream for a food delivery service is literally a global pandemic. So, today I open up I open the internet, I start looking through articles, start looking at the stock price. 90 to 95 was already high. Now it's 180. I think people are just interested in getting into an IPO early so that one day they can say, look, I got in at IPO. But that's not the reality. Now, I am coming out with a video later today about IPOs and why you should be very careful before jumping on an opportunity like an IPO, because very rarely do they actually end up delivering for the investor over about a 5-year period, if not much more. So thank you so much for watching. I really appreciate it. Just wanted to share my quick thoughts on Doordash and the stock price today. I think you should wait back, do your research, watch where the company goes with its competition, with regulation, wait till after the pandemic. Look, if you're somebody who, delved into the fundamentals and actually really believes in the company and has a bull thesis for that belief, by all means, go ahead. It's your money. But this is just my opinion. So please like, please subscribe, please comment below. Let me know what other videos you guys might be interested in or what I'm missing. I'd love to have a discussion. Thank you so much and have a great day.